Well, hello mates, welcome back to another edition of the Forex Weekly Forecast. My name is Alexander Nikitin, and what I am doing here, I am sharing with you some ideas that may happen in the next week, and also I give a little bit of education so you walk away with a little bit of knowledge after watching this video. And the educational part of today will be mostly connected with psychology, and I will call it the objective identification of your edge. Okay, and to start with, I should first uh, tell you what I think about trading. And to illustrate that, I need an empty space to for drawings. Okay, when I think about trading, I only think about it as a game of probabilities, as a game of numbers. I have a very strong belief that the outcome of whatever movement, whatever setup is absolutely unpredictable. You cannot predict the future. You cannot say either the either price will go up or it will go down. And what is the most amazing in trading, that to generate money you absolutely don't need to know what's going to happen next. You can easily generate money without knowing what will be your future outcome. So number one, your future is unpredictable, and the second point, you don't even need to know what will be your future moment to make money. Okay, so this is what I believe in, and this is the part of my probability thinking. Okay, so what is the probability? The probability is the outcome of not the current trade, but it is the outcome of 100 trades, of a large number of trades. It is a kind of pattern then you when you know that after 100 of setups you will have this much winners and that much losers, and knowing that, you have an edge over the market. You don't know the outcome of the current trade, it may be a loser or a winner, but you know that in the long run, after 100 trades, you will have this many losers and this many winners. So this is what probability means. Okay, once you know what is probability, the next thing that should be explained is the objective identification. First of all, to play some probabilities, you need to understand, you need to believe, you need to know that you are objectively identifying your edge. Because if you identify it differently each time, you will have different strategies. You will have different results. Think of it this way. You have a coin, you have another coin, and another coin. For example, you have 4 different types of coins. And you are tossing the first coin, and the outcome of tails or heads is 50 to 50%, yes? And instead of tossing the same coin again and again, you switch to next coin, you switch to next coin, and you switch to next coin. So this means that you will have an unpredictable outcome. It is almost unpredictable because the next coin is not dependent from the first coin. The results of the next coin are parallel. They are not anyhow connected with the results of the first coin. This is what people do when they can't objectively identify the edge. And let me demonstrate what I think. First of all, I will draw a kind of pattern, XABCD pattern. You may call it a Gartley pattern. For example, you know some rules for a Gartley pattern, for an advanced Gartley formation, or whatever you call it. And you say, after I have identified my XA leg, I then switch my Fibonacci's from X to A, and I wait for 618 retracement. If this criterion is met, then I stretch my fibs once again from A to B, and I'm looking for another 618 retracement. And if this criterion is met, then I stretch my extension tool from A to B, A to B, and to A again, and I'm looking for 127 extension of that. And if all these three line together, this means that my pattern is valid. I will place a buy limit here, stop is below X, the target is 382AD and 618AD as the secondary, and I will trade this pattern. So what's wrong about this? A very simple strategy. 1, 2, 3 steps, indeed 4 steps, and very easy rules, easy to remember. 618 followed by another 618 and followed by 127 extension. So what stops you from profiting the money? What is that? And this is let me draw it. And what stops you from making money using this pattern is this part, this first part. This is 618 of that, this is 618 of previous, and this is 127 of this. As you know, what I've circled, this part is very highly dependent on that. Let me show you. For example, you had it larger, and this time your pattern is invalidated because your B point is not touching X. Or, for example, you had it shorter, and again, this time is invalidated because your B point is touching 786. So depending on this kind of movement, this set of rules either will be valid or not valid, only depending on this type. So to talk about probabilities of Gartleys, you first need to have strict rules of this leg identification. I saw many times people taking this leg, being an impulse leg like this, violating some highs. You see that. Also, I saw it many times of this leg being an anchor leg. That means it is a kind of correction of previous leg to the downside. I also saw many times this leg being a retest leg and kind of forming the double top, boom, double top of that. I also saw it many times that this leg contains several legs, several movements, several waves, and so on and so forth. And as you may guess, because you know that this leg, depending on that leg, you either have a valid continuation or not, as you know that. You should also understand if this leg changes, the whole strategy changes. I've just enumerated you the 4 types of legs that I've seen, and of course there are many more specific types. I just calculated the 4 of them: an impulse, a retest, an anchor leg, or corrective wave, or several impulses, several waves movement. What this means? This means you are trading 4 different strategies. If you are measuring the leg of an impulse, you have this outcome. If you measure the leg, the corrections and extensions of that B to C and D points of a retest, the outcome will be different. If you measure the anchor leg, the outcomes again different. And if you measure what was the number for retest impulse, several swings, several waves, like the outcome is different once again. So having 4 strategies instead of 1. It is the same as having 4 coins for tossing. You tossed 1 coin, you had you had tails, and you switched to another coin, and you had tails again. You switched to the next coin, you have tails again. You switch to the next coin, you have tails again, and you say, okay, I had 4 tails in a row. Very large drawdown. My backtesting shows that I will not have them. Okay, it is not bad that you trade the 4 strategies at the same time. What is bad that you don't know the exact outcome of each of them. If you've done your backtesting and you found that overall 100 examples of the Gottlieb pattern is profitable, you never know how many of them were this type of XA, how many of them were the next type of XA, how many of them were the third type of XA, and how many of them were the number 4 type of XA. You never know that. Or you may know it. Yes, if you go and you have saved your screenshots and you say, okay, within 100 examples that I found, there were 25 types of this, 25 types of that, and 25 types of this. And also 25 types of number 4. But 25 is not enough to have reliable statistic data. You need at least 100. See what I mean? To have before you start trading these types of patterns, you need to have very, very strict rules of XA identification. And before you start identifying XA, you need to know how to read the market. So the first and the most important thing in trading these types of patterns is the reading of the market structure. If you don't know how to read that, well, you need to go and begin from the very beginning. Start from the very beginning. Okay, let me go to that setup I have for you. Look at this, guys. If you cannot identify a downtrend here, shame on you. Maybe trading is not for you. Just very simple, moving from the top left to the down right, downtrend. No matter what is your rules of identification. Okay, what I do in my analysis, I identify impulse. I identify another impulse. Why it is an impulse? Because it violates the previous impulse final point. This is the next low. And why I'm not drawing it from this leg? Because my rule says that the current impulse initial point is the highest point between the 2 lows. It is here. So the rule says this. Next one is here. This one. Why I ignore this? Because I also have some rules. I will reveal them later. I have this leg being the next. I have this leg being the next. And this is my final leg of that. If you look at this next leg, it contains a kind of double bottom within. But I ignore that double bottom because I also have some reasons to ignore that. First and the most important thing, because it is very small. Look at the previous corrections. Boom. And boom. 566, sorry, 612, 616, 475. So this is very small as compared to previous corrections. That's why it should be ignored according to my rules. And this leg is now treated as a single leg. Okay, why I have chosen this leg? The number 2 reason is that this leg has a close below the previous low. You can see it. If you cannot see it, let me zoom it in. You can see the candle close below the previous low. And when we have a candle close below the previous low, it signals about the continuation of the trend. And also, what I have here, I have large correction followed by a smaller correction, and now, most luckily, we will have it followed by another smaller correction. Most likely, I think. Most likely. Okay, once I have identified my leg, according to my rules, then I calculate the ratios. To identify the leg is not everything. After that leg is identified, I need the ratios. And I'm looking at B point to be somewhere within the zone of 382 to 786. I'm looking for C point to be somewhere within the range of 382 to A point penetration. And my D point is 786 no matter what from that XA. Let me apply some fibs so you will see my entry. Start from here to there. Okay. 786 is my entry. As soon as price goes here to touch that level, I sell it. I place a sell limit order at 786 and I place my stop loss at X, exactly at X. No 180R, no 113, nothing. And my target is the lowest close of this leg to the entry point, and it is never modified. So if price goes a little bit beyond of D, I'm not stretching it to factual reversal point. I leave it at the same place as I have calculated that before I enter it. So my target is 382. I only trade one position size. Earlier I've been trading 618 and I had to split my position into two parts to have a break even at 382, closing half of that position and take the rest at 618. But now I'm not longer doing that because I don't have very much time to manage my position. Okay, so entry here, stop loss here, sorry, take profit is a little bit low. It's 382. Well, that's it for today, guys. Hope you have found my explanations useful. And let us meet next week. I will give you a little bit more of my approach and a little bit more of my thoughts about trading. If you like that video, please press that like button, share it with everybody, subscribe to my channel. I really appreciate that kind of support you give me. Take care, trade your plan. I'll see you next time.